Stocks are holding on into the close. Bitcoin's down a bit here. Phil Streible joins us, Chief Market Strategist at Blue Line Futures, walking us through some of the other action. Good Friday, Phil. Good to see you again, sir.
Yeah, thanks for having me on, man. Tough to follow KG's interview because of the fact he was nailing so many good bullet points and how you guys were talking about, the possibility that the Fed doesn't cut. You look at that CME Fed watch tool, right? They got it, 97% chance. And I can tell you this morning, after all that data came out and everything, and we saw it seemed like every asset class was inflated across the board. That's when some higher power came and started hammering the market, buying the dollar index and just slamming bonds straight down and driving up those yields. So whoever that monster is, they've really got control of the room.
It's such a good point. Really like the way you frame that, because it's absolutely the story of the day, and maybe arguably kind of stealing story of the week away from earnings is the turnaround in bonds today and the rip in the dollar too, which is the stuff that kind of comes back to the Fed and says maybe things could be, not so one-sided.
Yeah, it is really tough because this morning what we were doing with a lot of clients, we were liquidating some positions, but it's like, you just can't liquidate fast enough with these markets turning on a dime like this. I mean, we saw the euro currency, it exploded 109.24. Dollar index was down at 103.44. British pound trying to push back up. That's the only one that kind of hung on a bit here. But man, I'm telling you, it's pretty rough out there. And I do expect more de-risking, coming into the election. And then what ends up happening is, regardless of who wins the election, you see them trying to put these particular positions back on because they feel like victory was achieved in their own sense because their candidate was elected. And then what happens is people think, oh, I'm missing it, and they start piling on again. And that's how you get better performance in November, December, and election years.
True. I like that point. So it seems like if there's not a major negative surprise or chaos, then we should have a little bit of vol that can kind of ease back in this market. But as KG was pointing out, just because vol's down doesn't necessarily mean stocks are up. Of course, we've had VIX up, stocks up too. So the fade generally in equities today, Phil, do you think it came from the bond situation, what we're talking about, or was it just kind of a failed buy the dip on tech?
Yeah, it was. I think it was the bond movement. But any of these stocks that have been coming out, I mean, it's just been, they come out, they write whatever as far as they're beating and things like that. And it just seems like the rate of change on their earnings growth isn't there. And then they start to question the forward path on these individual stocks, and they all just kind of slip. So at least it seems like some of the names are broadening out, like the Equalate S&P and things like that are helping strengthen the market in a more broad sense. Like, it was nice to see Intel and things like that going up, but we'll see what happens between now and then. All I could tell people to do is you probably want to have your sell orders, your profit targets, and your stop losses bracketed going into next week.
Okay. All right, Phil, the other stuff on the edges this week, Bitcoin down a little bit today, somewhat of a weird candle on the weekly. I'll let folks decide. There's a big long wick. It's still green, but obviously came off a bit from the frothy run-up.
Yeah, I mean, the prices remain elevated into the election. I think any kind of correction has been quickly bought here. So, we've seen a lot of dramatic inflows, but it's a lot of like twists and turn of who's going to win this election. We could have some comprehensive regulatory changes, especially under a Republican sweep. The new administration would address some accounting rules and allow banks to have custody of it. That's kind of a little bit far-fetched. Those are the $100,000 to $125,000 guys. But, I think that it's just going to be quite wild here. We got to break over 75,000, and that's where we can threaten, the 100,000 mark or get that chatter back in line.
The pull back to below 70, then still technically a breakout from that channel. We were trending in lower, right? So we still got hope that that becomes support.
I would expect the late to the party people come in on throughout the weekend and early in Monday, especially, the Trump supporters and everything come in and start buying that in anticipation of regulatory reform in that market.
Okay. Hey, gold real quick, 27.44, a little bit of a rough 2 days, but gold doesn't stay down for long.
Yeah, very disappointing that it broke below 2750, 2701 key level of support. We got to get back over 2750 and start chewing at upper ends and hit over 2800. That's how you get 3000 back in the cards. But realistically, with this bond monster out there and the dollar index guy, it's a 1-2 punch on the gold market right now.
Yeah. Big enough to knock it out, or what do you think?
No, not big enough to knock it out. There's too many countries out there that are still adding central bank holdings, things like that. Plus, you're going to start to see people go into it from just a volatility stance, a seasonal stance. They want to be participating in the gold market. It makes sense in a portfolio at this moment.
All right, good analysis, like the levels. Thanks, Phil. Appreciate the thoughts.
Thank you.
Nice look there across assets. Phil Streible, Chief Market Strategist at Blue Line Futures. Let's go back.